Let's get an important voice in who's been watching Indian markets for so long now. Arvind, Managing Partner, Geosphere Capital Management, joins in. Good evening to you, Arvind. Thank you very much for staying up for us. This is a 25% gain from August levels that we have seen in the Nifty at 6,800. Should funds have the courage to buy even at these levels?
Well, it's getting trickier because I think the pre-election rally has come quite far. But the one thing that keeps me saying that, it could continue is one of the things that I think hasn't been commented on enough, I think, amongst Indian investors, is the fact that if you look from mid-March to today, EEM, Emerging Markets ETF in the U.S., which includes all the major emerging markets, is up about 12%. Indian markets in that period are up. Nifty is up about 7%. So what's ended up happening in the last leg of this rally is that it's not an India-specific rally. If anything, the other emerging markets, which are lagging much more, are performing better than India recently. So I think that, there are more legs to this story than purely the India election story in terms of what's going on in terms of global risk in terms of emerging markets. So while the U.S. market has been struggling, you've seen the dollar weakening in emerging markets, currencies in emerging market, indices doing better. So I think that, therefore, India could continue, but I think I do worry about the sell the news potential, which I would say is not a small, but a rather meaningful potential that could happen, when we get to mid-May and the elections results actually come out.
But Arvind, is there relative more comfort with a sector like cyclicals or PSU banks, where even after the 60% rally since August, valuations could be argued to be cheap?
Well, clearly valuations are not stretched by any kind of normal earnings and normal multiples over a full cycle. The question really is, how early are we in making that bet, and how much will we have to wait to get those normalized earnings back? So, how far into the future are we discounting? So, yes, clearly the market's going to go higher over the next couple of years. The question really is it going to go much higher over the next 3 to 6 months? And I would say, over the next 15, 20, 30 days, the hope rally and the expectation rally still has some legs. But I think once you cross into the 7,000 level on the Nifty, I would certainly start to get a little nervous about the short-term expectations being built up. Because, the reality is that a new government is going to have its work cut out for it, but the effect of whatever the new government does will take a few quarters to bear fruit. So therefore, the question is how much further into the future are investors going to be prepared to look how far? But, any sell-off, to be perfectly honest, taking the other side of it, any sell-off, I think, is going to be relatively shallow, provided obviously the election outcome is as decisive as, most observers from the pollsters are predicting, as well as what the market's expecting.
Arvind, hi, good morning. Thank you for being with us this morning. It's a big day. 6,800 is what we hit for the first time ever on the Nifty. As a portfolio approach, is it a prudent strategy now to move money out of defensives and into cyclicals, something that we've been seeing for the last couple of weeks?
Well, I mean, it's been something that we said made sense for quite some time because, in the defensive market, it was the IT pharma names that led the way. So notwithstanding, one M&A in the pharma sector, the reality is that IT and pharma has not been where the action has been. The action has been in the cyclical names. And I think, again, I don't think either the financials or the domestic cyclicals, which depend on, kind of a capex cycle, whether it's, specialized niche equipment in the power sector or whether it is, broader cyclicals like LNG or what have you. I mean, I think none of these stocks is cheap or is unnoticed. But I think in terms of normalized cycle, there's still room for the upside. On the banking side, I think we're going to be looking at this quarter's earnings quite keenly to see how far along are the banks in terms of their NPA cycle, bottoming out. or peaking out, I should say, in terms of the NPA cycle, and therefore the downside on the NPA is kind of reaching their peak. So therefore, I would say that that's in the financials is an area, and some of the domestic cyclicals are areas where we continue to remain constructive, but again, being somewhat cautious about the valuation, the timing, and entry and exit points. But I would say that we're not selling anything right now. So I certainly don't think that this cycle is over or it's that far ahead that we need to be starting taking chips on the table right now.
What did you make of the FOMC minutes in the context of emerging markets? I mean, do you think the higher interest rates, the possibility of higher interest rates could be pushed down further, keeping the liquidity situation more benign?
I think that's absolutely accurate. I mean, although I think emerging markets have moved up over the last few weeks, and probably recovering from the concerns that the Fed could be moving on a faster trajectory. So today's news gives comfort to this rally that it confirms that the Fed is not on that faster trajectory, and therefore I think it does continue to provide fuel to the rally. But I come back to my viewpoint, which is that at the end of the day, all of these rallies have a certain amount of juice in them based on Fed liquidity, but to the extent that Fed liquidity is going to be gradually coming down. I think the speed of the interest rate rise may be today a question, but the taper is still on the table. So all of these moves at the margin are good for moderate rallies, but a more sustained upside, the kind that India has had, requires something more to latch on hope to rather than just the Fed alone. And that's where India, I guess, has a unique position in terms of an expectation that with the economic fundamentals having bottomed and recovering, and with any decisive action by a new government providing further push to that you could have a meaningful recovery in the earnings, and therefore the stock market would have a sustained cycle. Whereas other markets like China, Brazil, and others are being driven partly by hope, partly by being oversold, and partly by Fed liquidity. They will each need to deliver on reasons why the rally should have legs. So therefore, I think India's, so the Fed minutes is moderate good news for India, but the more important one is what happens on the economic front in India itself.
Arvind, hi, morning. What's the downside risk for this market, especially after election, and in case the market does not get the desired outcome?
Oh my God. If you say we don't get the desired outcome, then, the market could easily pull back 10, 15%. If you get some kind of a shock where it is not a Modi-led government, let's call a spade here, if that were not to happen, then easily 10% and could be as much as 15% downside for the market. Again, I mean, over time, it'll move on beyond that and look at the economic fundamentals, but there's so much hope built into that, that if you get an election shock, that would clearly be something that would cause a very sharp pullback in the short term.
I know my colleagues in the general news channels have not been very accurate last time, Anuj, but they always called the direction right. Maybe the intensity of the victory was not correctly called. So I seriously doubt whether the direction has been called wrongly at this point in time. It's so emphatic. Arvind, what about the high beta stocks in the mid-cap segment? Do you think that's where people should fish for value? At this point, should be a bottom-up approach so that you're a little safer?
I think, yes, the mid-cap sector is also, but, keep in mind that if you get a sell-off in the market, and again, assuming not the case of the more drastic surprise in the election, but even just a sell on the new sell-off, you could get pullback across the board, including mid-caps. But I think I think the mid-cap strategy is actually one that makes a lot of sense, because the mid-caps have been, such significant underperformers for so long, that there are some companies that have shown some meaningful growth where there's real value and there's underpinnings. And again, there are some of the companies that have cleaner balance sheets. Now, there are mid-caps and there are mid-caps, and there are some that have financial leverage. So, one can pick one's own risk tolerance. My point is there are plenty of good mid-cap companies with relatively strong balance sheets with attractive valuations, which would be ways to play the cyclical recovery that we find, quite interesting.
Arvind, I was hoping you would spot some for us.
Well, I mean, I think, for instance, rather than going after some of the over-leveraged stocks in the infrastructure space, companies like in the power equipment space or in the infrastructure space like Voltas or Crompton or others are to us, quite interesting in the sense that they're a way to play a recovery in the capex cycle without having to bet on companies with over-levered balance sheets and problem assets having everything get fixed. So there are ways to play it in the mid-cap arena where one does not have to make as many leaps of faith as are required with some of the other companies.
You fleetingly mentioned the bank earnings that you would keenly watch, but you didn't stick your neck out and tell us which banks one should be buying at this juncture. I mean, anything and everything is rallying in that space. So what should we be looking at?
If you really think the NPA cycle has peaked and is, or is close to peaking, and things are going to get better from maybe the June or the September quarter, if there starts to develop visibility, then clearly PSU banks is where the maximum juice lies, whether that's a State Bank of India or that's a PNB or some of the other even smaller PSU banks. That's where investors should gravitate. We're not there, although the PSU banks have had a decent rally. We've preferred some of the, private banks which have been, laggards till recently. So therefore, some of the private sector banks are still kind of, I wouldn't call the chicken way, but I think they're a slightly more prudent way to play this. But if we got more conviction on that, then the PSU banks would be the obvious next stop.
All right. Arvind Sanger, appreciate you sitting up for us. Thank you very much for joining us today. Okay, that's continuing in the optimism, but tinged with a bit of caution.